Good evening, ladies and gentlemen. This is Butch Shorek for Options University. And what we're going to do is we're going to recap what's taken place in the market so far. It's Thursday evening, December 29th, 2011. All right, with that in mind, access to this webinar is for educational and for informational purposes only. Those of us that are working for Options University are educators. We're not brokers, so therefore anything that we're talking about live in the market or talking about stocks are there for educational purposes only. With that in mind, let's take a look and see where the SPX was the last time we talked, which was Tuesday morning. All right, and as we were coming into the week, we saw that we were in an up cycle. And in this up cycle, what we were seeing was 1, 2, 3, 4, 5 days, 5 days where we were getting higher highs and higher lows. And we had a nice move up during that time, which worked out really nice for our put spreads as we put credit spreads as we were headed through this week, through last week. All right, so then what we see is that we're still in an up cycle in what basically looks like a sideways trending market. All right, well, with that in mind, our expectation was for us to continue up until we hit some kind of resistance or some kind of news. So let's go ahead and take and see what happened as we continued up. This is the 5 days up, and notice what we got on Tuesday. We got a doji, which is a potential reversal signal, and then what we got on Wednesday with bad news out of Europe, we had a big old pullback. And with that pullback, you see we were down about 13 points or so. All right, well, that was confirmation for our reversal signal from the doji on Tuesday, which was a tight range day. We went to a wide range day on Wednesday. And then what happened today is we had good news on the home front, and so and in Italy. And what happened is we ended up with a large range day to the upside. So we got most of back of what we lost yesterday, and we are continuing this sideways trend. Notice we are not as high with the S&P as we were when we started the week. We're still a little bit below that, and so we'll see what happens tomorrow as we begin this climb back up. We also got some support from this diagonal support line, which we had drawn in previously on the breakout. All right, well, then what happened is the S&P today was up, the Dow was up today, and the NASDAQ was up, and we see that the S&P is I see that's the wrong number for the S&P. The S&P, I'll give you that number on a different slide. So economic indicators, when we talked last, we talked that there would be more focus on U.S. economic events. We seem to be getting that. Well, we had some announcements this week. Pending home sales were stronger than expected to the tune of 7.5%. versus that expectation or estimates of 1.5%. A big boom in pending home sales. Our PMI, our Chicago PMI, was stronger than expected at 62.5 versus estimates of 61. Bad news during the week was the European banking system. This is like our Fed announced then. This is what caused the pullback on Wednesday, or was held somewhat responsible for the large move. Had announced that their balance sheets were not looking all that great as they had put all this money out to the individual banks. And this might sound familiar to you. We've heard this before. The banks weren't lending the money out, they were hoarding the money and keeping it there for liquidity. Here we go. Fed gave them the money, and then there was a question as to whether they would lend it out, have the same thing happening in Europe. Last night we had an Italian bond sale that had a lower yield than expected. In other words, the last bond sale in Italy was around 8%. And we saw that last night's bond yield was about 5.7%, which means that there was not felt by investors that there was as much risk in that Italian money as there previously had been. Tomorrow morning, we got Chinese manufacturing data due out, which is like our PMI, and it's due out tomorrow morning. So that could affect the market as we see the opening tomorrow. Will give us an indication of what China is doing as far as its manufacturing process. There were no earnings this week, so there was nothing to talk about as far as earnings of any consequence. And the VIX has been holding its own. It's still down around that 20 to 25 basis. So we haven't seen that pop up like we had previously seen it pop up with European news. We said the week ahead what we expected when we talked last was low volume. That's exactly what we had. As a matter of fact, today's volume was 60% less than the average volume for the last 20 days. And that was typical for what we saw in volume during the week. We talked about a continuation of the Santa rally. We really went sideways this week with our 3 days so far, but we really haven't given up a whole lot with our rebound today off of that low. So we're kind of in a sideways trend at this high level. We'll see if the Santa rally does continue as we go through. Remember, by definition, it's the last 5 trading days of the year plus the first 2 trading days of January. It's a little out of skew this year because of the fact that we have holidays on Monday for both Christmas and for New Year's. But nonetheless, we'll see where we are January 4th as to that Santa rally. Remember, the significance of it is if the Santa rally is positive, it will give an indication of a fairly decent first quarter. If the Santa rally is negative, and in other words, it's lower after the rally, after that time frame, then it's since 1950, 100% of the time it's been the beginning of a new bear market. So it'll give us some kind of indication. But remember, we trade what we see, not what we think. We talked about European sovereign debt could nail us. There could be more downgrades coming out of Moody's or the S&P for European countries. We didn't see any of that. And we see that we are currently above the SPX break-even point for the year. It began the year at 1257.64, and we're at about 1263 at this point. So we see that we're going to end up a little or down a little, depending on what happens in the next 3 trading days with the SPX for the year. Probably won't see any big moves. Stocks to watch, we talked about Apple, MasterCard, McDonald's, Nike, and all of those basically fared better than the overall market. So for some of those that have the gold package, we will cover this in more detail in just a minute.